CNBC.com's Hugh Son is back with us, too. We'll get to him. Actually, let's just talk about some of the headlines that were generated in the last couple of hours here. Hugh, for one thing, we find out that Warren Buffett himself had decided to take a fairly large stake in Activision after the Microsoft deal to acquire the company was announced, 9.5% or so position. That's clearly, as he described it, virtually an arbitrage, basically just a bet that the deal gets closed, presents a nice return, cash return, if in fact that deal happens. And then, of course, a lot of comments on inflation, really just saying so much money being thrown into the economy seems to be behind this rush of inflation. Warren Buffett saying that it needed to be done, most likely, but this is one of the results. And then finally, Hugh, some relatively sharp-edge comments, as we've come to expect, on crypto, including Warren Buffett saying he wouldn't buy all the Bitcoin in the world if you offered it to him for $25.
Yeah, Mike, really curious because I would take it for $25. So, he likes productive assets. He likes farmland. He likes equities with dividends, that type of thing. On the other hand, he holds more than $100 billion cash. Now, when it comes to money, he only thinks, that green paper is money. And so that's, I think, his sort of rigid worldview is no surprise to anybody. He's called it a rat poison squared. Munger thinks it's evil and going to zero. I think those are some of the headlines today. So no surprise from these two that they haven't changed their view. However, just really quickly, I mean, the U.S. is not going to pull China and ban Bitcoin and ban crypto. That's pretty clear. And so I would argue that their view on crypto is overly rigid at this point in the game.
Well, and actually, by admission to a degree, because Warren kept joking that, a quarter of the people out there are going to take offense and hate them for these comments. So there's some recognition that they're out of tune with this part of the markets, if you want to consider them part of the overall markets, but that it just simply doesn't conform to any definition of either a productive asset or a cash instrument that is, sanctioned by a government and where you can pay your taxes with.
Yeah, look, I mean, we're in the process of determining that. Clearly, Biden has, a task force that, is tasked with, creating a regulatory framework where this is actually going to be something that they, discuss over the years. On the other hand, look at the other headlines. He's talked about inflation, the pervasive nature of its impact on stocks, bonds, the ability for the companies to be productive and earn a margin. I would say that the real takeaway, you look at the full, scope of what he said. There isn't a lot of new news here, and at the same time, not a lot of bullish discussions about what the economy is doing this year. He's obviously always bet big on the U.S. economy over the long term. What he's been a little bit more mum on is, sort of the short term and near term prospects of companies during a time of high inflation, of increasing costs and increasing pressures on everybody from, consumers to businesses, to investors. So, I really think that, you take a look at this and, if you look at this discussion a year or two in the future, you might think that, potentially he sees storm clouds on the horizon and doesn't really want to dwell on that too much.